Tervetuloa seuraamaan tallennetta meidän S-Pankki Global Private Assets rahaston kuulumisista ja ylipäänsä siitä, että miltä nyt pääomasijoittaminen juuri tällä hetkellä näyttää. Mun nimi on Pasi Poikkeuksen ja toimin täällä S-Pankissa vastuullisena meidän myynnin ja asiakkuuden operaatioista. Ja vieraana täällä on Mike Ryan Hamilton Laneiltä. Hamilton Lane on meidän kumppani tämän GBA-rahaston hallinnoimisessa ja konkreettisen salkunhoitajana on luvannut tulla kertomaan meille viimeisimmät kuulumiset rahastosta. Ja sitä kautta ollaan tosi iloisia, että ollaan saatu heidät, tai tällä hetkellä Mike, tänne meille vieraaksi. So I will now turn to English. We are very pleased to have you here, Mike.
Well, thank you. It's great to be here.
Nice to have you in Finland, and we have an idea to just go through about the Global Private Assets Fund, and it's like a briefing of how it's going.
Okay.
Great product, and great to be doing it with you.
Absolutely. Well, thank you. It's great to be here in Finland, and happy to talk about the fund that we've built and its progress to date. First, just briefly on the structure of the fund. In this vehicle, investors can gain access to a fully diversified portfolio of private equity and private credit through one investment. But importantly, it's accessible through a monthly subscription and limited monthly redemption vehicle. So there's no need to tie capital up for 10 years as in a traditional private equity fund structure. And we're trying to provide all the advantages of private markets investing in a structure that's more convenient for individual investors and for mid-sized institutions. We launched the fund just over 3 years ago now, and happy to report that it's up over $2.2 billion in assets today. And it built out a portfolio that investors can buy into and get the capital deployed in today. Just a bit on Hamilton Lane. So we are a global investment organization focused on private equity, over 30 years old. For most of that time, focused on the needs of the largest institutions around the world and making private equity work for them. But because of this business, we have very strong relationships with a lot of lead investors in private markets, a deep understanding of how that works, and experience solving investor challenges in private market investing. And we've brought all of that to help us out in the Global Private Markets, Global Private Assets Fund. Now, just a moment on some of the structural advantages here and what we're trying to achieve in this fund. In a traditional investment vehicle in private markets, an investor has to commit to a new fund that is locked up for 10 years. And they may have to deal with funding capital calls into that locked up fund as the lead investor finds new investments. And then once those investments are found, they're largely illiquid until the lead investor chooses to sell them. Not only that, it often comes with relatively large commitment sizes, 5 million or more, just to get into a single fund, let alone a diversified portfolio of funds. What we're trying to do in this vehicle is to give all the advantages that institutions have liked about the private markets, right? The potential for higher returns, diversification into smaller companies in different sectors of the economy, and as well as some of the advantages in diversification. But doing that without some of the challenges that have traditionally been in the private markets. Also, you get access to Hamilton Lane. So as an investor, we are allocating capital where we see the most attractive opportunities across the private markets and partnering with some of our leading sponsors around the world. Now, as we put this vehicle together over 3 years ago, we got the input from investors that there was certainly a need for a fund like this, but there weren't a whole lot of vehicles like it on the market. It's not the easiest thing in the world to take illiquid assets like private equity and to make them work in a structure like this. But because of Hamilton Lane's experience and footprint, we're able to do so. Well, how are we doing it? Well, we're avoiding any investments in those traditional 10-year locked up funds. We call those primary fund commitments. We do them in other parts of our business. They are a good way to access the market, but they don't work in a vehicle like this where you have monthly subscriptions and redemptions. What we're doing instead is investing directly into the capital structures of the private companies, and we're buying diversified stakes of mature fund portfolios, so-called secondary investments. On the direct side, rather than investing into a fund run by a lead sponsor, we're investing directly in the underlying companies, right, alongside a lead sponsor in their area of expertise. Advantages there, we're able to target the industry and geography exposure that we like. We're able to get an investment that's somewhat shorter in maturity. So instead of a fund being 10 years long, these direct companies tend to turn over every 4 and 5 years. It's also a very fee efficient way for our investors to access private markets because we're not paying the full management fee and carry that we would be doing if we went into an underlying fund. On the direct credit side, very similar model. We're investing alongside a lead sponsor directly into the capital structure, but here we're going into the debt rather than the equity. So we're more senior in the capital structure. They have a current pay coupon that helps generate some liquidity for the fund, and they're even shorter duration, right? These tend to refinance after 2 to 3 years, so we have a constant flow of capital back into the fund if we do need to pay out redemptions. Importantly though, this is the lowest expected returning portion of the portfolio. We're trying to return on average 10 to 12% net of all fees to our investors. And so we keep this direct credit piece to be around 15% of the overall portfolio. And last, at about a third of our holdings are these secondaries investments. So I talked before about what we're not doing is new investments in 10-year locked up funds. There are some challenges of that, dealing with capital calls, dealing with large lockups. You also have what's called a J-curve of negative performance in the first few years if you were to go into those locked up funds. What we're doing instead is we're buying into mature funds. So if another investor came into a fund 6 years ago and they're locked up for 10 years, they want to get liquidity. We at Hamilton Lane are a specialist who can buy that exposure from them and provide liquidity to them, provide very good investment returns for our investors. Advantages of secondaries, well, again, it is relatively short duration. You're buying in close to the end of the fund's life, and so you can get some capital back off of that in short order. There is no J-curve. You have no sense here that you might have negative unrealized returns in the early life as you would in a locked up fund. And we're often able to buy these portfolios at a discount to their appraised value, and that can help returns very early on in the investment life. Importantly, also to point out that while our fund is 3 years old, Hamilton Lane has been active in these areas for 15 to 20 years. And we have single strategy institutional funds covering each of these areas. And in GPA, we're investing in some of the same deals as those funds and still providing that semi-liquid structure I talked about earlier. And you see here how the portfolio is positioned today. We have the investment types that I talked about that have a balance of duration, fee efficiency, high returns, and diversification. It is a global portfolio that matches where we see the best opportunities in the private markets. So it's about 2/3 in North America, where we have the most mature private markets. But importantly, we do have some good relationships with lead sponsors in Europe, in Asia, and in other parts of the world as well. The chart that we show in the GP, those are the lead sponsors that we're partnering with around the world. Importantly, these are not Hamilton Lane originated deals, but we're able to lean on our strong relationships in North America, in Europe, and Asia, in venture and buyout, and make sure we can partner with those investors in their areas of expertise. In terms of strategy, we are building this as though it could be an investor's only exposure in the private markets. So while 2/3 of the portfolio is in buyout, where we've seen the most consistent performance across market cycles, we also importantly have exposure to growth and venture, which can really provide outperformance in periods when that's being rewarded in the markets. And as I mentioned before, 15% of the portfolio in credit to help provide shorter duration, more stability in the portfolio, important in periods of market stress. We talk often in private equity about vintage year. Those are the years that deals are closed, and it's important to have a spread of different years in the portfolio so that you're not always buying in at the same market environment, but you're spreading that across the cycle. Important in a vehicle like this, where there could potentially be redemptions over time, that we have companies that are brand new investments that are in the mid stage of their life cycle and some that are approaching exit. So that if there are potential redemptions, we're managing this portfolio so that the existing assets are sold over time and can generate some liquidity there. And in terms of industry, diversified as you'd expect from a global portfolio like this, but somewhat different exposure maybe than you would get from a super large cap public equity investments, because these are companies that work at a scale of 500 million to a few billion in enterprise value. Just a few things that are not here. So we chose not to put any real estate or core real assets. We're trying to create a pure private equity experience here, and so those real asset investments have a different kind of risk return dynamic. We also chose, as I mentioned, not to put any new 10-year locked up funds, no primary fund investments. While they can be good on their own, they don't work in the liquidity here, and we don't have any liquid or listed assets that we're buying in this portfolio. We're not using 30% in a public stock portfolio to make redemptions work. We're matching the liquidity of the portfolio to the liquidity we're providing on the redemption side. So it's all well and good for me to say, hey, there aren't a lot of these out there, but Hamilton Lane is very well positioned to manage this. But now we have 3 years of experience and track record showing how we're able to run this. We've ramped the vehicle up to over 2 billion in underlying assets, and we've done it by producing a very diversified portfolio. There's over 140 positions in the portfolio today. Importantly, we've achieved this performance with what's so far been lower volatility than the public equity markets, which a lot of our investors really appreciate. And so when you look at the prior page with the different exposures, if you look at here and say, over 140 positions across vintage years, across general partners, this is a portfolio that a new investor can buy into today. And rather than being locked up for 10 years, they have the ability to rebalance over time if their needs change.
Thanks, Mike. Excellent comments on the fund, and I see it as a total solution for investors to invest in private assets, and you have managed to build up a great product on that.
Thank you. Well, we're very happy with our partnership with S-Pankki, and hope it continues to be successful for both of us for many years.
Thank you. We are looking forward to it too. Suomeksi vielä loppuun, niin S-Pankki GBA-rahasto on tosiaan kuukausittain merkittävissä ja erittäin mielellään annetaan asiasta lisätietoa, eli pyydämme ottamaan yhteyttä omaan yhteyshenkilöön S-Pankissa ja siitä kautta sitten eteenpäin harkitsemaan, jos vaikka päärahasto olisi hyvä vaihtoehto sinne omille sijoituksille. Kiitoksia kaikille katsomisesta ja kiitoksia. Thank you.